India, very, very tough, very, very tough. The Prime Minister just left. He's a great friend of mine, but I said, you're a friend of mine, but you're not treating us right. They charge us 52%. You have to understand, we charge them almost nothing for years and years and decades. And it was only 7 years ago when I came in, we started with China and charged them. We took in hundreds of billions of dollars from China in tariffs. And they understood, honestly. President Xi understood. He said, look, I understand. And the other countries, and they all understand. We're going to have to go through a little tough love, maybe, but they all understand.
Good morning, it's 3rd of April, 7:30 in the morning, and the world is waking up to a new reality. The new reality is that we are starting the show early at 7:30. The new reality is that the tariffs are at play. The new reality
is the reason why we're starting the show early today.
And tariffs are at play. Tariffs are at play. Some on expected lines, some not on expected lines, but red is the color of the moment. So if you're just watching the show, heat up your coffee, make your tea, because the headlines are going to be hot this Thursday morning.
Oh yeah, absolutely. The only headline that the Globe is eyeing today is Liberation Day, what is in fact being seen as a watershed moment in the global economy. Trump has hit the globe with extensive tariffs, as the US president said that he's being kind on them by charging roughly half of what they charge us. These were his exact words, calling these as discounted reciprocal tariffs. Trump said that the US will charge an import duty of 26% on India and 34% on China, which is the maximum that he's imposed on any other country. In fact, speaking about India, he described tariffs by New Delhi as a very, very tough. Went on to allude that the friendship between him and PM Modi, even as he said that India has not been treating US right. Moving on to the EU, Trump has announced a 20% levy on imports and 10% from the UK, two of the main trade partners and allies of the United States. While, of course, announcing the most aggressive reciprocal policy, Trump also said that it will usher in a golden age for America, calling it the Liberation Day.
So I don't think there is anything which can be called as a very nasty surprise. Yeah. Tariffs were coming. It is only in terms of the quantum which in a sense has varied. So for me, headline number one is that where tariffs are higher, and I think tariffs are higher for what America would call them as the original offenders for them, which is China, China, Mexico, and then Canada. So the first real tariff tariff move is against these three countries. Second, where does India fit in? See, 26% is what India has been slapped with, but these are ceiling tariffs, which means that the actual tariff when the final negotiation between two countries would be done would certainly be lower than that. Third, pharma has been exempted, and pharma is India's third largest export to US, so a bit of a relief there. And markets right now, meanwhile, well, Wall Street reacted, futures were down, but look at Asia, China is almost back in the green, Asian markets are bouncing back, and Nikkei also has recovered. So lots to talk. It's not looking all that scary if you read the first headline. I guess the detail clearly are indicating that there is a lot to really think over, which is that, look, new tariff regime is at play. It is not as harsh as what it appeared, at least specifically for India, given that tariffs are being imposed higher on China and Taiwan and Bangladesh and South Korea. One would say that on the margin, actually for India, it is an indirect victory.
Yeah, that seems to be the case. And look at Trump's tariff tsunami. And if I could just go in order of products in terms of the reciprocal tariffs, the exemptions have been steel, aluminum articles. The exemptions have been copper, pharma, like Nikunj said, bullion, energy, minerals, which are not available in the US. That, of course, is from the White House fact sheet, and semiconductor and lumber as well. He's declared an emergency to increase the US competitive edge. He's talked about 10% tariff on all countries, which is going to take effect immediately from April 5th. Canada, Mexico, remember the current fentanyl and the migration orders, they remain in effect. And that's what we're picking up from the US White House fact sheet. But very quickly, before we take it across to Rajeev Agrawal and make sense of the madness right now. I want to tell you how mad it is really for the globe and what kind of reaction that you're seeing across, equity markets. For the US, the Dow futures, of course, are the ones which are taking a very big knock. It's almost a 1,000-point fall that you're seeing on the Dow futures alone. Clearly, this is going to spark a trade war of sorts. We're yet to see reaction from many countries, including India, on the tariff implementation. But that said, look at what the pre-market rates are currently. It's down 3% on the S&P futures right now. NASDAQ is on its way to take a knock of about almost 650, and these are the futures rates that I'm talking about. And the Dow is already down about almost 2%. Asia, Japan, yes. It's down almost 1,000 points. Hong Kong as well is down 1.5%, but that's not the case with Shanghai. While it started off lower, but you've seen a recovery since then, and it's completely flattened out. And even the gift nifty, it's down only 100 points.
Siasha, now you know that the event risk is behind us and the fine print is out and the ceiling rates are out. Now, whatever would be implemented after, diplomacy between India and US or US and China would be much lower than the ceiling rate. So markets now know that, look, the biggest event risk for the world in terms of trade risk, I think that is over. Now, negotiations would start. Then impact would be assessed, and then everybody will talk about, okay, this sector would benefit, that sector would not benefit. Now, if I really look at strictly for India, there are two things which I think I would like to point out. Number one, pharma has been exempted. It's a large sector, it's a large component, and it's a large component in terms of the stock market presence also. Second, on China, the import tariffs now, the ceiling numbers is 20 plus 35. That makes it 55. So imagine if US, if you are competing with China, I guess somewhere China will have less teeth in terms of where they would be competing with global companies. So for Indian companies which have competed with China, now perhaps the Indian manufacturing sector, the Indian automotive sector, the Indian textile sector, they in a sense would definitely get an advantage because the tariffs on China have gone high. For example, solar, Aisha. China has a lion market share because they are much more competitive. Now because of this import duty, suddenly India will become slightly more competitive. So categories where India has competed with China, given that the ceiling tariff in India is 26%, for China is 20 plus 35, that makes it 55. It clearly means that Indian exporters now certainly will have an edge, which was a blunt, point because China was much more competitive.
Okay, let's try and analyze not just what the tariff implementation is going to mean, but what it means for your portfolio, given that the world markets are seeing a knee-jerk reaction this morning. Rajeev Agrawal from the Doordarshi Fund joins in on the show right now. Rajeev, hi. Late night for you. Thanks for staying up. But tell me, what is it that you're making of the reaction now to tariffs? Aggressive, you think?
Yeah, actually, the good news is, at least as Nikunj was saying, now we know that what the tariffs are. And I do think that tariffs will change the supply chain of the world, because now you will have to figure out how do you get goods into the US in the most competitive manner. But the rates have been higher than what was being projected. So yes, it is being a little bit on the higher side. I personally think this is really the starting gambit where the negotiations will begin. And so he wanted to come in strong and ensure that people come to him and the negotiations are easy negotiations. So I think that's really where he's coming from, I feel.
Right. Rajeev, so, just wanted to understand, for countries like India, pharma's exempt, but yes, there is a blanket 26, tariff imposition. Tell me, for India players, given that we've had our own cycle of correction and on our way to rebound, the FIM money is finally trickling back into the equity markets as well. And the gift nifty this morning is down only 100 points. And I say only because we've had it much worse, up until the month of March. Tell me, what does it mean for India equity market watchers?
Yeah, so actually, India has not really been impacted that badly in this tariff, because we have to look at what are the goods India is exporting and what are the competitors for those goods. So as Nikunj was saying, India is at 26%, but China is at 34 plus 20, which is 54%. So really, India does get an advantage vis-a-vis China. In textiles, if you look at it, Bangladesh was a big exporter of textiles, and that is where we see Bangladesh at 37%. So I think across many sectors, again, Vietnam is getting hit 44% on the electronics. or across everything, but Vietnam is a big electronics exporter. India getting hit at 26%. So I feel in many of those segments where India is competing with other countries for similar products, India is in a better situation. And to some extent, that is what is getting reflected in the how the Nifty is behaving in the futures market.
All right, James Knightley, hello, good morning there. James, is my voice reaching you?
It is now. It wasn't before.
All right, wonderful. So, we are waking up to a new reality, and the new reality is that tariffs are at play. With this kind of an tariff rollout, especially in countries like China and India, markets should be in a panic mode. But I can see on my screen that Japan has recovered from the low, China has opened the green, and looks like for India also we could be a flat start.
Yeah, I think it's markets are taking putting a positive spin on this. I'm much more concerned from a domestic US consumer spending story. The US consumer is 70% of the US economy, and US consumers are going to be quite stressed by this. It's going to put up prices considerably at a time when we're seeing government austerity. So yes, China or India may feel that they've got away relatively lightly, but you've also got to overlay that with what's actually going to be happening within the US economy. And it's pretty universal, the views that this is going to be pretty bad news for that US growth story. As I say, consumer spending is going to be under downward pressure, and businesses are going to be facing a very uncertain economic environment. Are they going to be putting money to work immediately? Maybe not. So there is this sense that stagflationary risks are on the rise. So it's not just the tariffs that India and other countries have to contend with. They've also got to acknowledge that the growth cycle may be changing quite rapidly in America as well.
Rajeev, let's look at how the sequence of events could move. Now there could be diplomatic talks, there could be renegotiations, there could be, I give you this, you give me that. So can I say that whatever the fine print would be, the fine print would certainly be much better than what the current tariff rollout has been? Because these, Rajiv, are in a sense, some would say, the ceiling rates. The real negotiation will happen much below the ceiling rate now.
Yeah, I think definitely to your point, Nikunj, the negotiations will begin now. But till these negotiations go on, and these negotiations will go on with different countries at different pace. So I think the dynamics of these negotiations will keep the market on the tenterhooks for a long time, just because there are so many different negotiations that will go on with different countries. The one other thing that I want to point out is James' point, which is that, given that tariffs have been imposed, means the cost of goods for the US consumers goes up. And clearly that will be inflationary, which will prevent Fed from cutting rates, especially if there is inflation, which means that the cost of capital is going up. And that will be another big drawdown in terms of the stocks and how the markets will behave. So I think those are the 2 points I would say.
James, the other thing is that many countries would now also roll back their own tariffs, right? Because the very nature of the US tariffs is reciprocal in nature. We've already heard that from Australia. Do you sense many countries following the same?
I'm not sure that they'd actually get much out of Donald Trump, because Donald Trump's using tariffs for 3 things. One is a diplomatic weapon, and that is achieving its aim. Look at the border security surrounding Mexico and Canada. Secondly, there is this aspiration to create more manufacturing jobs, reshore manufacturing. He wants this to happen. He needs this to happen. And thirdly, he needs the money. He needs the revenue to be able to give him the fiscal room to deliver the tax cuts that he's promised. So I think we're seeing a lot of optimism in some countries out in Asia right now that, oh, don't worry, we'll be able to negotiate these down. I'm a little bit less confident on that because, as I say, he needs the money.
So I'm just going to, Aisha, let's talk about the sequence of events. One of the sequence of events is that White House has announced tariffs. These are ceiling tariffs. Bilateral negotiations will start, and then perhaps a little bit of give and take could happen. So the final picture could be slightly different than what the current, tariff structure is. Also, Aisha, there are two things here. What will happen to US? What will happen to India? What will happen to emerging markets? Now, such high tariffs in the short term will slow down US economy. So be rest assured that in this entire tariff play, while US is imposing tariffs, the biggest slowdown actually and the biggest uptick in inflation will happen in US. So I expect that after such sharp tariffs, US will underperform. Second, China, technically if these tariffs are at play, really would be out of business. So this entire money which went into China, that China is cheap, go back to China, China is affordable, actually that also templates get challenge, because if tariffs are so high, and the US is not going to go back to 20%. The tariffs could be between 45 to 50%, which means for China, exports will slow down. Flows which are moved into China, you'll have to think again. What it means for India, well, tariffs 25%, well, they are at play. But pharma has got an exemption. For India, the main, and it's not trade, but for India, I think it is really the view on IT which matters, and nothing changes for IT. So two large sectors for India. One is IT, which is about $250 billion, and the rest is pharma. That's about 10% of the total exports to US. Both those sectors, in a sense, have not got affected. Rajiv, can I take this point forward and say that, look, guys, if tariffs are coming, that's actually bad news for US first, and then rest of the world after that?
I absolutely agree. Tariffs will definitely increase the cost for the US consumers. It will slow down the economy. There is no question about it, because the consumers is a very big portion of the economy, and so they will be hit. Whether there is offset on the other side in terms of tax exemptions and so on, which will help, remains to be seen. But I would expect that the consumers will slow down and the cost of capital will go up, because the Fed will not be in a position to lower the rates if the economy slows down, especially if the inflation is high. So I think on the cost of capital side, things start looking worse because of the tariffs in the short term, at least. In the long term, I do feel that as US builds out its base on the industrial side, especially for important technology, I think it's a pretty important thing that US builds strong capabilities in technologies which are critical for its long-term success. I think that will be over the very long term helpful, but in the short term, definitely a challenge.
James, Rajeev, both of you, thank you so much for your time today and getting in that quick reaction with us.
If you like this video, then like, share and subscribe to ET Now.